So let's take a look at the market statistics for Northeast Florida home sales. So if you take a look at single family homes in Duval County is Jacksonville, Jacksonville is Duval County, the median sales price was $331,000, relatively flat pricing from a year ago. And what we've seen is in the last 24 months, the prices have been relatively flat. And you can see that a year ago it was 330 and today it's the 331. From last month, it's down actually 3.7%. If we take a look at the overall metro area for single family homes, it's $383,000. That's roughly a $50,000 difference for the homes that are in the suburbs. So let's take a look at all property types and let's take a look at all the 6 counties, and we can really take a drill down on the overall market area from St. Augustine to Nassau County and Amelia Island and Clay County, St. Johns County, and Baker County. So the median sales price is $350,000. It's down from a year ago from one and a half points. So $355 a year ago, and it's at $350 this last month. So you're going to see a lot of red on this because the number of closed sales was down 9% from August of last year and 6% from last month. If we come down to the bottom, the active inventory is 10,347. It's up 92%. It's doubled. Inventory has doubled in the last 12 months because a year ago it was 5,300 and we're over 10,000. So the inventory has doubled. Of the 10,000, 4,087 actually came on the market last month. That's a lot of houses. That's 40% of our inventory came on the market last month, and we only pended 1,700. So if you take a look at the pending sales versus the active inventory, it's basically 17% of the houses that are on the market are selling. This has created a little bit of challenge for sellers because sellers, and that's why you're seeing some pressure points on pricing. They've been relatively flat, a little up, a little down, but relatively flat. So folks that are looking to sell their house, it's a price war and a beauty contest right now. So you've got to be really competitive to be able to sell your house. Doesn't mean that you have to give it away, but you got to be really competitive, and it's got to be prepped exceptionally well. Neutralizing, depersonalizing, and decluttering will go a long way to be able to make the buyer have a model home feel when they look at your house online, as well as when they come through your house. So 17% of the houses that are 17% of the houses are selling right now, or 1,700 pendings. A year ago it was 2,200, and it's gone up and down a little bit, but it's 1,700 this year. So if we look at housing affordability, this means last year it was 71%, and it went up. As interest rates go down, housing affordability goes up, and you're seeing it start to swing back up because the interest rates are coming down, and I'm talking about that in a little bit. As interest rates come down, affordability will go up. So 76% of the folks that live in Northeast Florida that are over the age of 18 could afford the median sales price, which is the $350,000. So if the average days on the market or median days on the market is 50, and then we have roughly 2,200 sales. Those that went pending in July, 2,200 sales closed in August. So if we take a look let's switch over to mortgage rates and take a look specifically at why this is going on in our market. So if you go back, this is going back to August of last year. This is a 1-year chart. The 1-year chart says in October of last year, 7.79% interest rates. And then as you see, rates have come down, and we're down to about a 6.2. So it's about 1.5 points that it's come down. That is pretty significant. So, and actually the lender that we work with, his rates are actually, for a conventional rate, that range from 5.4 to 6.125. So the lender really does matter when it comes to affordability and rates. But let's just compare the difference. 7.79, if you take a $350,000 home, if you mortgaged all of it, which it wouldn't be that way, but if you mortgage $350,000, 7.79, your payment would be $2,500. This is principal and interest only. Your taxes and insurance on a home like this is likely going to be $400. So you're probably looking at about a $2,900 principal, interest, taxes, and insurance for a $350,000 house. Now, let's take a look at what it would be. So this was a year, last October, it was 7.79. Rates have come down to 6.125. Look what it's done to the payment. 2,100 versus 2,500. So there's a $400 swing that's happened just because of interest rates. And what that means to the average buyer, the average, every $10,000 that you borrow costs about $60 on a 30-year mortgage. So if you think about it, a 400, that's about that the average buyer from October of last year till now, because interest rates have come down a point and a half, they can afford roughly $70,000 more house on their monthly max of what a lender would loan them. $70,000 is a significant jump for the last 9 to 10 months. So that's good news. And with the Fed rates coming down, anticipated to come down the middle of this month, and another rate cut at the end of this year, the Fed rates aren't directly tied, but they're indirectly tied to mortgage rates. The mortgage rates have already started to come down and the Fed rate hasn't. So don't expect if the Fed does a half a point reduction that automatically it's going to be a half a point reduction in mortgage rates, because the rates, the mortgage rates crept up as the Fed increased rates, and they're going to creep down. And the mortgage rates have crept down a point and a half, and the Fed hasn't come down at all. So it's going to continue to come down. We're going to see a lot of good relief for homeowners. This is a great time to buy simply because there's less competition and there's a lot of inventory that buyers have to choose from. So buyers are in control of their purchases, and that puts you in a really good spot. If you're thinking about buying, it's a great time to buy because we know that interest rates are coming down, and you can marry the house and date the rate. So a year from now or 2 years from now, you can take that 6.125 and it might be a 5 or a 4.5 or something like that as we get further down the road. So there's no competition. You can get a crazy good deal on the house. Buyers can afford $70,000 more house today than they could last October. So it's a great time. And as rates come down, you're gonna see a lot of this inventory get chewed up and sold, and then it's going to create more competition and get back into competitive situations. So I hope that you have enjoyed this month in real estate and all of these fantastic market stats. You can go to nefar.com and then click on the resources tab, and it'll show you where the market stats are. They're right here. Click here. In any case, we'll see you next time.